There is likely a huge market catalyst coming up next week, and you need to be aware of it. I'm here to talk to you about it. I am Dr. Stock, Doctor of Education, and where do bees go whenever they need a ride? To the buzz stop. So next week, end of the week, the Fed has their Jackson Hole symposium, and Jerome Powell comes out to speak on August the 25th. And that is important to us because we want to think back to what happened back in August, last year's Jackson Hole symposium. In this video, I'm going to talk about some of the economic reports that we had surrounding that time, and then talk about how they compared to what we're seeing this year in August of 2023, because I think there's some important metrics that are much different than what we saw before. I will also tell you later how you can get up to 16 free stocks using my link that's down in the description, and how you can get access to my exclusive content through the link down in the description for the Patreon. For now, I want to focus on those economic reports because I don't think that we're in the same scenario. I don't think Jerome Powell's message is going to be the same. Last year, Jackson Hole Symposium, we just got off of a huge rate hike, a 75 basis point rate hike after several big rate hikes leading up to that. And then we didn't expect there to be a whole lot more happening. Then he came out and said, there's going to be a whole lot more, and we are going to absolutely crush the economy to get that inflation back down. That was the essence of the message, even if they're not his words. And the market reacted. I will show the Qs later. We'll take a look at the Qs, which QQQ, which tracks the Nasdaq 100, and you'll be able to see the pain that it caused when he came out that day and spoke for the Jackson Hole Symposium and what happened with the market fallout following it. And then I also want to provide commentary about what I think he's going to talk about this time, what the message is going to sound like. And I have three things that I think we want to listen for at that speech coming out of the Jackson Hole Symposium. So let's move on from there to the economic calendar that I have. And I always use in my videos trading economics. I have no stake in this. I just like the way that it puts things together, and that it's just I can scroll through and see a lot of the numbers. And then if I need to go and get the actual reports, I go and get them. So the first one that I'm going to pay attention to is the year-over-year metric for Redbook. So Redbook, this is same stores compared against the same stores year over year. And so for this one, 15.5%. That's August of 2022. That is not 2023. This year's number is 0.1%. Almost no different from the previous year. So whenever this number came out, this year's number is pretty much unchanged. So as far as inflated prices, they're not really happening as per the Redbook metric that we see here. The next one that I have for you is unit labor costs. So when we take a look at those, unit labor costs last year were up 10.8%. This year, it's 1.6%. You're already starting to hear the huge difference. You don't need to know the exact numbers, but just listen to the difference in these numbers. So the next one that we have is average hourly earnings when we were concerned about wage price spiral. Average hourly earnings year over year, 5.2%. This year, 4.4%. So we do have a decline in that. We are not continuing to inflate with those prices. Let's move on from that to consumer credit. Consumer credit change, 40.15 billion. That a lot of consumers were still taking on debt, continuing to spend in the economy, even with the higher prices and everything, and then keeping those inflationary pressures going. What does that mean this year? This year, we have 17.85 billion that people are starting to kind of draw back from all that taking on of credit and credit tightening, the credit lending standards. That tightness is taking away from economic activity. So we are slowing down. That is taking away from inflationary pressures that we had in 2022 that don't exist in the same manner or don't exist at all in 2023. So that is also important to pay attention to. Let's go to CPI. So core CPI year over year, 5.9%. When we look at 2023, it's down to 4.7%. So we are already on the downward trajectory from that. And we know about the lagging indicators in that. We know that shelter is lagging in that and keeping those prices artificially high. And then when we remove those, inflation's pretty much already down to their target or even below their target 2% that they're after. And they have even addressed the fact that they know it lags and it's in the pipeline. We're waiting to see that come out in the data. We need to see it in the data. So this is much different than what we got from them last year. PPI is even something else to pay attention to. We look at those core PPI, 7.6% in 2023. That number drops down to 2.4%. Now for import and export prices year over year, 13.1% and 8.8% respectively. When we talk about those for 2023, those have declined there's actually been deflation for import and export prices as supply chains have eased, that we don't have the same jankiness that we did where it was hard to get stuff shipped out. It was hard to get stuff brought in without paying a ton to make that happen because the world was just getting back to order, and the world is in much better order, at least as far as being able to get supply chains where they need to be. So down 7.9% for export prices, down 4.4% for import prices. So we don't see that. By the way, side mention, consumer sentiment has increased. So that is also something to pay attention to as well. Now, the 5-year has stayed about the same, 3% to 2.9%. So that is also something that's very noteworthy. Now, the last thing is retail sales. Retail sales year over year, 10.3%. This year, 3.2%. So that's enough calling out all those different percents. My point is, as you were listening to them, we are not in the same situation that we were in 2022. Jerome Powell cannot come out and in good conscience make the same speech that he made in 2022. I don't think that those would be the things that we need to crush inflation. We need to be aggressive about this. I don't think that's the same speech. Here's what I think it is. I think it comes down to 3 R's. The first one is resurgent inflation. I think that they can't keep on selling the story that inflation's way too high and that it's on the wrong path. Inflation's on the right path. It might still be too high, but it is coming down. They've mentioned that they are at restrictive levels with their federal funds rate. They've also, Jerome Powell has addressed directly the fact that credit tightening is also something that's impacting economic activity. So it's causing further inflationary pressures, downward inflationary pressures, where we're actually seeing that disinflation take place, that we're actually just waiting on some of the lags to also come in. So for that reason, he might say that they're not done raising rates, that they'll have to raise rates if they have to, that they're keeping a close eye on inflation, that they're waiting for the reports to come out. But resurgent inflation, depending on how he talks about that, that can be downward pressure on the markets, that if he puts a lot of fear in the markets, that we have signs that inflation could come back in a real way, the markets aren't going to respond well to that. The next R that I have for you was about the rate hikes themselves. So the rate hikes are tied to resurgent inflation. Little to no resurgent inflation seen or talked about, then the likelihood of those rate hikes continuing is something that also diminishes with it. So we want to hear what he has to say about that rate hiking. Now, he did say that they're willing to do it following the last FOMC meeting, but with no real conviction. He seemed hem-haw-y about it, like, yeah, it might be something that they might have to do, but it didn't sound like he was interested at all. It sounds like, hey, I think we're set right now where we're at. That's what it sounded like. That's the subtext. In other words, what he's saying without saying it. To me, I think they're done hiking at this point in time. So unless we do get the resurgent inflation that actually shows us that we're back on an upward path, that we are seeing more of a reinflating or an uptick in the rate of inflation, that would be something that I think would be that downward pressure. So rate hikes, I think that's a little bit less of a worry. Now, the last R is probably the biggest worry, and that's about recession, signaling what if they feel as though they need to drive us into recession in order to get that inflation rate down as quickly as they need to do it. Now, that's going to be downward pressure for the markets as well. So those are the 3 R's that I think that we need to listen to. And even if he doesn't mention them directly, there's still the indications that I think that we want to look at. So at this point in time, I'm going to transition over to the Moomoo app, and I do want to let you know that down in the description of this video, you can get up to 16 free stocks using my link just by making your deposit. You get stocks valued up to $2,000 a piece. So $100 or more gets you 5 free stocks, $50 cash reward at every tier, $1,000 and $5,000 deposits gets you 15 free stocks, and then that last tier gets a free share of Tesla or Google as well. And if you like my commentary, I'd like to hear more of it, don't forget about the link for the Patreon. That's also down in the description, where I have my exclusive content, including my NVIDIA stock price prediction and NVIDIA earnings projection. It allows me to keep coming back here to YouTube and bring you all this information as I find it. So like I said, down in the description, find those things, and enough hem-hawing of my own. Here's Moomoo itself. We're looking at the Qs, and when I look at this thing, man, August of 2022 just stands out. As a matter of fact, I can see the candle. Here it is. This is the day of the Jackson Hole Symposium. That was an ugly day. That was a 4% drop that we got from the previous day. 4%. Something that tracks the Nasdaq 100 to go 4% down in a single day. That was ugly. So, do I think that we're going to have another 4% down day this year? I don't think that we're going to get that single 4% down day from the Jackson Hole Symposium unless he really goes super hawkish on us, which is unexpected at this point in time. Like I said, that is Friday, August the 25th, that we get that Jerome Powell speech coming out. You can see that today we are gapping down a little bit and that we already have a significant sell-off. So we already are experiencing some of that correction off the highs. This is already a fairly extended sell-off. So here's what I see happening. One of two things. One, we can continue to sell off up until the meeting, and then we recover the day of the meeting. So it's sort of the sell the rumor and buy the news sort of situation, which is backwards. The other thing that I see happening is that the markets do recover because they have sold off for a while, and then the day of the meeting, then they pull back down again. So I think it's one of the two, and we're going to have to watch how that build up takes place. So there is an important technical indicator that I do want to tell you about when I look at this. So when I look at this, at the Qs, I think it is very significant to point out that we are on the RSI almost in the oversold territory. As a matter of fact, we are just below 30, which puts us just into the oversold territory on that. And why is that so significant for the Qs? Well, let's go back and take a look at some of the other times. So right here, this is end of December. We were darn near oversold on the RSI. And then look what followed not long after. So let's back up a little bit more and find some of these other times. So here, we were just about oversold, had a decent little bounce recovery, and that's just after the Jackson Hole Symposium, which is back here. So we sold off, hit about oversold, recovered and restored a few percent back to our portfolios. And then here, we went oversold, dropped down a little bit more, so that one faked us out a little bit. Now we're oversold again, had a decent recovery. So near oversold, sold off a little bit more, still near oversold, and then decent recovery. It doesn't spend too much time down near that value. So if we go back to some of the other times where we had, here's an extended sell-off that we had back in 2021. We went oversold, nice little recovery, especially after that trend upward. So if we are continuing that trend upwards, or since we have just been on that path, it is possible to get that little recovery in there. Here we're near oversold, ripped up. Here we're also near oversold, ripped up. So I think that the RSI, if history plays out the way that I think it will, because we're getting near that oversold territory, and let's pop up one of my Stockmo and Maya's favorite, the Bollinger Bands. There we go. We are full candle right now outside 2 standard deviations below the mean. I think that we're going to be in for a recovery. If it doesn't happen today, then on Monday, I think that we could start to see some of that recovery come back, at least in the short term for the Qs. So for the markets for next week, I think it's possible that because we are near that oversold territory, we've already experienced almost an 8% drop from our peak, that we do start to give back a little bit of it. And it is possible that leading up to that Jackson Hole Symposium, that we actually do feel pretty good about ourselves. Now, mind you, the better we feel, the more it hurts when we get bad news. So should we get bad news on that day, that could be a nice little drop for us as well. So just to be prepared for that upcoming catalyst. If we do continue to sell off, the more that we sell off from here, the more likely it makes it that we start to rubber band back upward. Don't forget about that opportunity that is those free stocks from Moomoo. You can find that link down in the description. Sign up, make your deposit, get your free stocks. Also, remember, I have exclusive content and a private Discord community that you can get by using that link for the Patreon down in the description. Click, sign up, come on over and join us. NVIDIA earnings are coming up after the market closes on August the 23rd. So that is a day that I'm very excited about. I have my NVIDIA stock price prediction and NVIDIA earnings forecast available over there, including my update video on that. So I think that is very much worthwhile to go ahead and take a look at, plus the watch list of stocks that's over there, plus my updates that I put out on Tesla for Tesla stock price prediction, and also Tesla earnings forecast as well, which I'll be updating for the third quarter as we draw nearer to it. I try to push value and service as much as I can. Thank you guys for watching this video. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.